Hello everyone, can you guys hear me? Okay, great. So I see that more or less everyone can hear me. Huh? Hi. So welcome everyone. This webinar is on the US election 2020 and understanding its impact on healthcare and foreign policy itself. So I am Boon Siang, equity specialist here at Phillip Securities, and I'll be joined by my colleague Rong, who is the US analyst from Phillip Research. So without further ado, let's just dive into the seminar itself. Okay, so for the table of contents, I will be covering in the first half of the webinar, starting with healthcare policy, where we will see Trump's Medicare versus Biden's Affordable Care Act, or ACA for short. Then I'll be touching on the industrial sector policy, which will cover on airlines, transportation, construction, and defense areas. And lastly, I'll be talking on some of the candidates' points of view regarding foreign policy and the issues on China, Russia, Middle East, and the Canada and Mexico border itself. And so for the second half, Rong will be covering the analysis of swing states and provide an overview for sector outlook. And finally, some of the key sector impacts as well. So first up is the healthcare policy for the US elections. Healthcare is one of the main sticking points in the US presidential elections. Why? Because Americans place a high priority on healthcare policies. A survey of American consumers by Health Research Institute in 2019 suggested that 71% of adult Americans were more likely to vote for a candidate based on his healthcare proposals. Drug prices have been steadily increasing in the US, and this has translated into rising healthcare and insurance costs. Drug spending has increased by more than 40% over the past 10 years. So you have your research and innovation costs, you have your drug advertising, you have your sales and marketing costs. And there is also the merger of pharmaceutical firms itself. So all of these combined lead to higher expenses. And then these are passed on to consumers via higher drug price itself. And this has become a worrying trend for Americans. So what does Trump propose? Trump has said that he would come up with a cheaper and better healthcare plan. Although since his term, no actual plans have been implemented or executed yet, as the laws have not been actually passed by Congress. Nevertheless, Trump has signed executive orders, such as getting Medicare to pay the same prices for drugs in the other countries, where the cost of the drugs are lower. He also has mandated drug companies to make known their drug prices in their TV advertisements. So these are just a few of the executive orders that Trump has signed so far. On the other hand, Biden has proposed to track drug prices and not let them rise faster than inflation itself. He also wants to regulate the drug patent system that currently deters new competitors from joining and prevent market abuse. Essentially, what he is trying to do is he is aiming to revoke the right of drug companies to negotiate with Medicare over drug prices. So what is the likely effect on the market? Both parties or both candidates appear to have a similar and common goal, which is to reduce healthcare costs and drug prices also. So a lower drug price, this may hurt margin and profit, and this will in turn cause share price of pharmaceutical firms to fall, or they could fall. So certain counters that you should look out for could include Merck, Pfizer, Amgen, and GlaxoSmithKline. Moving on to Medicare. So Medicare, what is it? We all heard of the term, but what exactly is it? So Medicare is a federal health insurance program largely for Americans aged 65 and above. It also covers a small minority of younger people with disabilities and etc. Trump has been steering towards privatizing Medicare and intends to cut payroll tax funding of Medicare permanently. This would indirectly remove federal funding for Medicare and push it further towards the private health insurance market. So this means that we will expect a greater shift towards private health insurance, and this may benefit certain insurance companies. Biden, he intends to lower the enrollment age for Medicare from 65 to 60. And he also wants to extend Medicare coverage to dental, vision, and hearing treatments. So if Biden wins, we will expect an increase in utilization of medical services, and this would benefit healthcare service providers. The last part for the healthcare portion is OBAMACARE, or also known as the ACA. So this OBAMACARE strives to provide affordable medical insurance for all Americans and aims to protect the consumers from insurance companies that may intentionally mark up patient costs. Trump wants to repeal and replace this ACA, which will require consumers to be medically assessed before enrollment. And since they require such a thing, so this is expected to have higher premiums. If Trump wins, companies like Pfizer and Merck, the share price might rise because they have greater control over the pricing and thus the profitability itself. Biden, on the other hand, proposes to build on the existing ACA. He intends to give Americans more insurance choices, cut healthcare costs, and simplify their navigation of the healthcare system. This direction could hugely benefit biotech and medical device industries, such as Amgen and Gilead, and even some medical device companies such as Abbott Laboratories could also be beneficial for them as well. So that more or less covers the healthcare section. Next up is the industrial-related policies itself. As the industrial covers a wide range of subsectors, we will only focus on certain sectors today. So in the transportation sector, we will touch on transportation infrastructure and airlines. And from the capital goods, we will focus on construction and aerospace and defense itself. For the transportation infrastructure and construction subsectors, Biden has proposed a US $2 trillion climate plan, which has allocated a big portion into transportation infrastructure and construction. So his plan includes a substantial budget for infrastructure spending, which would outweigh the negative impacts of tax increases. Overall, it's a well-planned and organized budget because he breaks it down quite clear-cut. Spending also produces higher fiscal multipliers, which would potentially pave the way for higher longer-term sector growth itself. Whereas for Trump, he proposed a US $1 trillion budget with a big portion for roads and bridges, and the rest for 5G network and internet service infrastructures in rural areas. Trump's plan is slightly more vague. His spending plan is more vague than Biden's, and it is expected that the corporate tax cut policies will likely produce a lower fiscal multiplier. So if Biden wins, counters to look out for would be construction-heavy counters like AECOM, Jacob Engineering, and Caterpillar, as highlighted below. Next will be for the airline subsectors. So as you all know, airline industry has been one of the hardest hit industries by the pandemic, and the sector has managed to survive only because of government aid itself. If Biden is elected and Democrats gain a majority in the Senate, they have a Heroes 2.0 stimulus bill. It may be passed by the Senate quickly. So this estimated US $25 billion will provide financial aid and potentially stop the layoff of airline employees. And we can also expect under a Biden Biden win for increased regulation and carbon tax. Trump, he didn't really push for stimulus. He rather pushed for a smaller, skinny relief bill, which provides direct payments and bailouts to struggling airline companies, and deregulation is expected to continue. Their fate is likely to hinge more on the development of a vaccine than the outcome of the US elections. So you see that there is not much counters to look out for airlines. As of now, their prospects are a little bit hard to determine given that there's a lack of visibility in vaccine development. Lastly is the aerospace and defense subsector. Biden signaled that he would reverse Trump's military buildup, and he favors towards arms control. He is likely to re-establish the arms control agreement, whereas Trump, oppositely, he withdrew away from arms control agreement from military superpowers such as North Korea, Iran, and Russia, and is expected to continue the global arms race. Since he took office, there has been an increase in the buildup of defense under Trump's term. And Trump's victory would mean a good thing for the defense industry. And this kind of counters or such sectors to look out for would be Lockheed Martin, Raytheon Technologies. These two are defense and aerospace counters, and also the Industrial Select SPDR Fund. So this is it for the industrial related policies. We will now head on over to foreign policy. In a nutshell, Trump and Biden, they are very divided in their views and priorities over different foreign policy issues. So in a poll by Pew Research Center early in August 2020, about 79% of US registered voters said that the economy was very important for their voting decisions, while 68% cited healthcare. So foreign policy fell right in the middle at a spectrum of 57%. So why do we still look at it? Because foreign policy is often intertwined and influenced by domestic considerations such as safeguarding the economy, or climate change, or border control, etc. So it is still influenced by your domestic thoughts itself. So first on the list is China. So Biden has pledged to counter abusive China economic practices, and he wants to renegotiate certain aspects of the original Trans-Pacific Partnership trade deal, which he, during his term as a vice president, he actually helped to set up this deal itself. So what Biden has said so far with regards to China points to a more multilateral approach, and this places greater emphasis on alliances and human rights, and is likely to be less reliant on tariffs and arms sales. However, we do not expect tensions to dissipate immediately. We expect Biden to maybe re-evaluate existing levies, turn towards US allies to put pressure on China and counter China through a collective reduction in the independence on China for its supply chains. So Asian equities in general could see some near-term relief if we see a Biden win. Trump, on the other hand, he had threatened to punish China for unfair trade practices. We have seen him engage in the 2-year trade war and push forward with the Phase 1 trade deal. But we also expect to see a potential decoupling of economies, as Trump wants to end reliance on China's trade and supply chains itself. And one such sector to look out for is the rare earth sector, rare earth and mineral sector. So the counter can be Van X Vector Rare Earth / Strategic Metals ETF. Moving on to Russia. Russia is interesting because I think we all think that Biden views Russia, or rather Biden himself, he views Russia as an opponent, whereas compared to China, he only views China as a serious competitor. So Biden has pledged to hold Russia, or President Putin accountable for the interference in the 2016 US elections, as well as the alleged Russian bounties on US troops in Afghanistan itself. If Biden wins, it could be unfavorable for the Russian economy, and we might see collective sanctions with the European allies put onto Russia. So if such sanctions were to take place, some counters that you can look out for will be those largely diversified counters such as Yandex itself. And then the Russian ruble could also take a hit itself. On the other hand, Trump's stance on Russia keeps wavering between downplaying allegations of Russia's interference and compared to the contradictory penalties on Russia imposed by his own administration. So there's sort of an ambiguity over there. So, however, we expect a Trump win could potentially boost Russian equities instead. And one possible ETF to look at is VanEck Vector Russia ETF. And this is a diversified ETF with exposure to Russia as well as fossil fuels. On the issue regarding the Mexico and Canada border, Biden has also pledged to remove or revoke Trump's policy on asylum seeking, basically his immigration policy. He wants to stop further construction of the US-Mexico war. And apart from vowing to stop the Keystone XL pipeline, a Biden win is likely to improve bilateral relations with Canada. And if that happens, Canadian equities such as, or exposure to Canadian equities such as the iShares MSCI Canada ETF could get a lift or boost. Also, likewise, counters to look out for will also include renewable energy with exposure to Canada, like Canadian Solar and Brookfield Renewable Corp itself. Why those counters with exposure to Canada? Because they are more likely, Biden's view is in line with Canada's view of towards a more renewable or clean energy sort of world itself. Whereas Trump is critical of the NAFTA deal. NAFTA is the North American Free Trade Agreement. It was replaced with the new United States, Canada, Mexico Agreement trade deal. So Trump has also revived and repeatedly pushed for the Keystone XL pipeline. So if he is re-elected, we can expect a boost for TC Energy Corp, which is the one company in charge of the energy infrastructure project that cuts across Canada, US, and Mexico itself. So we can see the differing views on differing views of Trump and Biden itself. And we also see the intertwined foreign policy with the domestic policy of climate change and fossil fuels for both parties. Last on the list is the Middle East. Okay, Middle East is a very complicated subject. It is, in fact, the region of Middle East itself has been long subjected to many and heavy external influences, and it's been politicized very frequent. So Biden is in favor of rejoining the nuclear agreement deal with Iran if he is elected. And in terms of military, he does not seem to support raising the Defense Department's budget itself. So a Biden win could potentially see the lifting of oil sanctions on Iran in exchange for the nuclear deal, or in exchange for Iran to agree to a nuclear deal itself. So if that really happens, most likely there will be an increase in oil production from Iran, and because there's a greater supply of your OPEC producers itself. And then this may end up translating into lower oil prices. And then on the other hand, for Middle East, Trump did find some recent success in brokering a normalization agreement between Israel and the United Arab Emirates. So this led to a temporary truce, and it it provisionally put on hold Israel's intention to annex the West Bank and Palestine also. So it's sort of a small but welcome step towards finding peace and towards Trump's goal of ending endless wars in the Middle East. However, even though Trump claimed that he wants to eventually end endless war in the Middle East, Trump, like Biden, they both have pledged or they both proposed to reduce the US military footprint in Middle East. But we noticed that Trump, throughout his term, he has been steadily increasing spending since he assumed office in 2017. So if he wins, even though Trump says that he might reduce military footprint in the Middle East, we still expect defense and aerospace contractors to fare well, such as, so this once again ties in my previous point on the industrial part. So Lockheed Martin and Raytheon Technologies, these two are counters that you can look out for. These are aerospace and defense counters. And yes, this is mainly all of that for Middle East itself and for foreign policy actually. So this ends my part on the presentation. If you are interested and do want to find out more in-depth information, you can scan the respective QR codes for the articles written by my colleagues. So my colleague Wei Yan, Sylvia, and Edmund, they contributed to the healthcare article. It's very interesting. If you want, you can just take a quick scan and then it'll just send you to the link of the article itself. And then Li Rui contributed to the industrial article itself, and myself on the foreign policy articles. So that's it for my part. I think once you are done scanning, or if any questions, you can post it in the Q&A. We will answer that at the end of the webinar itself. I will pass my time now on to Rong.
Okay, thank you, Boon Siang. So do give me a moment while I share my slides with you first. And in the meantime, if you can hear me loud and clear, probably just raise your hand so that I know that you can hear me. Okay, good. Okay, so now that you can hear me, my name is Rong. I'm a research analyst from PhillipCapitals Research. So today I'll just bring you through some of the analysis of the swing states and also a broad sector overview, okay, before the upcoming election in 5 days' time. So this is the table of content. Okay, first of all, we can just take a look at this is the most recent poll as of today, 30th October. Biden is still leading Trump, okay, not surprising. But what we should take note is that there has been a consistent lead in terms of election polls. And this is important because if you were to compare it back in 2016, Clinton's poll will tend to be more volatile. Okay, whereas for Biden, okay, it has been a very consistent lead. So these points that later I'll just explain more, but this points to the fact that Biden is in a better position to win the presidency as compared to Clinton back then. This is the betting odds, same thing as we see. So Biden has been consistently leading Trump. So for this upcoming election, it's important for us to actually take note of those swing states. Okay, because for this election, we may not have a true results on election day itself, because there will be some states who actually have a extended period of time for them to actually count all the mail-in votes. Okay, so for us, what we can do on election day is to take note of the results for some of these swing states. So if we were to look at states like Florida, okay, Arizona, and Michigan, okay, North Carolina also. So all these, they actually allow the state government them to count, as in to collect all those mail-in ballots first, and then so that during the election day itself, they can just need to do the counting. They don't have to, spend time trying to open all the envelope, trying to verify all the signature. So all this can be done beforehand for those swing states itself. So we may have a results for these swing states during election day itself, and it will definitely point towards a huge favor towards a certain candidate, because whoever is able to win over a majority of these swing states, high chance he will win the presidency. So as compared to Clinton back in 2016, okay, Biden has consistently maintained a lead of over 3 points, okay, more than Clinton. And in recent months, if you were to look at the month of late October, which is recently, the lead has actually improved dramatically. So when we look at this, because back in 2016, okay, what happened to Clinton was that during the last few weeks of the election, Clinton was actually hit with an email scandal. So the email scandal actually emerged, from her time during when he was still the Secretary of State. Okay, so there was some email leak during the last few days, okay, 9 days before the election, which caused her ratings to drop dramatically. So for Biden's case, we do not see such a scandal. Of course, for Biden, there is a scandal regarding his son's involvement with Ukraine, right? But from what we see from the polls, it doesn't really have that huge impact on his polls yet. Okay, so that said, Biden has a better position to win the presidency as compared to Clinton. If you were to zoom into some of the key top battleground states, okay, so 5 days to election, Biden had a 3.4 point lead over Trump, and compared to Clinton back in 2016, okay, it was actually a 1.8 point lead. So if you were to revisit 2016, Clinton actually lost the 6 battleground states to Trump. So with a better rating for Biden this time round, okay, there could be a higher probability that he will be able to win over the swing states and ultimately win the presidency. So as you can see from the chart itself, out of these 6 swing states, Biden actually have much better poll ratings, okay, in almost 6. So the one whereby it's very, very close will be the state of Florida. So later I'll go on to say, why Florida is such an important swing state for this election. But for now, what we can take note of is that, out of all these swing states, Biden is definitely in a much better position. Okay, so for Florida, if we zoom into Florida, for the past 40 election, the candidate who actually won Florida will win the presidency 93% of the time. So there is only one instances in 1992 whereby we do not see this phenomenon. And this is because in 1992, back then, the winning candidate already have a very huge lead. Okay, very huge lead, such that, even with Florida, the losing party is not able to catch up in terms of the vote. So ultimately, if you look at Florida, it will definitely be a bellwether for US election, especially for this time round. So what we can do during election day is to look out for Florida. So we will be expecting them to be able to release the results on election day itself, because Florida actually have a 40 days lead, meaning since September, okay, they are able to collect all the votes, they are able to open up, verify, and just to be there ready for counting during election day itself. If you look at Florida, back in 2016, okay, like I mentioned, that there was an email scandal during the last few weeks of October, which ultimately caused Clinton's polls to plunge. For Biden-wise, we do not see this yet, okay, but for now, we will definitely have to look over the next few days to see if he's able to even improve his poll in Florida. So on Thursday, we see an uptick in terms of polling in Florida. So that is because Biden actually went over to Florida to do his campaigning. And today is Friday. Today, Trump actually will be going to Florida itself. So what I'll be looking out for will be for tomorrow, okay, whether when Trump went to campaign in Florida, whether he's able to, improve his polls over Biden itself. So this is still uncertainty here. So for this election, there is a surge in the mail-in ballots. So actually more than 71 million ballots have already been cast already. Okay, and there is a tendency for electoral dispute in some states, especially in Wisconsin and Pennsylvania. Okay, why is it? Because for these two states, they can only start to verify all those votes on election day itself, and we are talking about millions of votes that they have to they have to process. They have to manually go and verify the signature. They have to look out for all the postmark. So all these will definitely delay the election result for these few states during election day itself. So there could be a tendency for electoral dispute because Trump could say that, election day is over. Okay, we need to stop counting now. And why is this an issue? Is because if you look at the number of ballots requests, Democrats voters tends to request for more absentee ballots as compared to Republican voters who prefer to vote in person. So during election day itself, the phenomenon will be this. Okay, early tallies will be deceptive because they will count those in-person votes first, and it will show early Republican leads. Thereafter, absentee votes, which will be tallied later, will then show Democrats gaining ground. So there is a key risk in that, before they are able to finish counting the Democrats' votes, Trump Trump will step in, and say that election day is over, you need to stop counting. So that could be one of the key risks or key electoral dispute that could potentially emerge this time around. So this will definitely not be in the Democrats' favor. But that being said, if you look at some of the swing states, they have very good pre-counting policies like what I mentioned, Florida and North Carolina. So for these two states, they already are able to process all those mail-in ballots already. So we'll be expecting to see the results for these two states during election day itself. And if Trump were to lose Florida and North Carolina, okay, it's a very, very high chance that he will lose the presidency already. So in terms of sector overview, if you look at the average S&P 500 returns before and after election day itself, so 1 month before election day, S&P 500 delivered an average performance of roughly 0.7%. So this is from all the election days between 1980 to 2016. And 1 week before, traditionally it should be a positive returns. Okay, but for this year we may not be seeing this because this year is we are being hit by this COVID situation. Okay, but moving forward wise, if you were to see 1 week after till 1 month after, okay, you can see that actually a return still remains fairly muted. Okay, why this can happen is because even after election day, okay, the results is preliminary, meaning that it is a result, but it's a non-confirmed result. So over these next few weeks, what the states will do is they may do a recount to verify the results, and thereafter they will submit for a confirmation. So all this will definitely take time, especially if we are talking about a very closely contested election like this year itself. Okay, so this year wise, if there is a very close race, okay, we may not be able to definitely pinpoint the winning party during election day itself. So this could potentially drag on, and market doesn't like uncertainty in this case. Okay, so how you can position yourself is we do still remain bullish going into 2021. Okay, because we expect that there will be a fiscal stimulus. Okay, regardless of who becomes the president. Okay, we may see in February after the new president or after the new president take over, but ultimately there will be a stimulus. And if you were to look at 2021, that's the timeline. Mid 2021 is the timeline whereby they will expected to have a vaccine, or maybe even earlier. So with a vaccine wise, now the key problem the two key problem now is in terms of fiscal stimulus and also the COVID situation. So after the election, we will have fiscal stimulus, and the COVID situation, we may have a vaccine to tackle. And this will definitely promote some risk-on sentiments towards the market itself. So we believe that investors will have to be patient, because these few weeks, even a few weeks after the election day, it may just be a very muted movement. It could be a very, very volatile market movement. So you may want to wait for the real results to settle down first, okay, for all the market volatility to settle down first before you look for an entry point to go on board. But ultimately, we are still bullish going into 2021. In terms, if you compare incumbent and a non-incumbent presidency itself, incumbent tends to deliver, market tends to favor an incumbent win, which in this case will be a Trump win. So with the likelihood that if we were to see a Biden win, okay, we may have lower market returns as compared to a Trump win itself. This is also considering that, you know, Biden, he has his tax hike policy, and also his stance on, you know, having more regulations in terms of businesses itself. So all this will definitely tend to lead to a lower return as compared to Trump. But ultimately, we believe that, you know, investors should still stay invested. Okay, because, you know, even though it's a lower return, but it's still a sizable return. We are talking about 3% over the next 3 months after election day itself. So this is the average performance that we see. So in terms of sector overview, okay, as we can see, 1 month before up till 1 week before, sentiments tends to be relatively weak. Okay, this could be probably because due to uncertainty over, you know, who will actually win the election, especially in a very closely contested election. And the defensive sector generally tend to outperform, okay, as compared to sensitive and cyclical sectors. So even after the elections, you can see across all sectors, things may remain slightly muted 1 week after. 1 month after returns, there tends to be some recovery. So when we are talking about 1 month after, it will be around in the December period. Okay, but thereafter, ultimately, you know, the bullish momentum start to pick up going into next year, you know, 3 months and 6 months after. Okay, so this is basically, you know, what I have explained. After election day, market performance will be muted, and this is because of the certification process. So this is the process whereby results will be official. So if you are talking about some swing states whereby, you know, the votes are very, very close, okay, they will definitely take a few weeks to recount everything and verify again. So this could be one of the reasons, okay, why after the election day, things still remain quite uncertain itself. But ultimately, you know, 3 to 6 months, market performance tends to be bullish. So traditionally, cyclical sectors tend to outperform, with financials, materials, and consumer discretionary sectors being the strongest performing sectors. So if we think of it going into next year, if we are talking about stimulus and also potential vaccine, of course, if we have a viable vaccine that is in mass production, ultimately all those cyclical sectors will be able to, you know, play catch up in terms of their price performance. So these are some of the industry or sectors that you may look out for if you want to, you know, go into this election play. For Biden win, of course, I will not go in, you know, in depth, but for Biden win, positive to slight positive, of course, will be, you know, clean energy, utilities. Utilities is because it's less affected by the tax hike, because utilities, they have the potential to, you know, pass on the cost, okay, to consumers. Whereas in terms of healthcare, manufacturers, equipment, service providers, and also construction, they tend to benefit, which I believe just now my colleague Boon Siang has touched on. Whereas for neutral, neutral-wise, when we talk about neutral, we are referring to a kind of a mixed impact. So of course, some healthcare portion in terms of insurers for Biden may be quite mixed. Okay, and also in terms of transportation, in terms of big tech, in terms of communication service. Okay, so of course I won't be going in depth. So if you want, you can definitely refer. This webinar is recorded, so ultimately you can refer back to read through the comments itself. Okay, for the negative side, definitely will be healthcare pharmaceuticals because Biden want to clamp down on the drug pricing, and also in terms of financials because he wanted to have more financial regulation, and also the tax hike will actually dent tax savings for the large bank itself. So this one I'll go through later. And of course for energy side, because he's shifting towards a clean energy. So all those oil and gas and refining industry may take a hit. So I'll be talking about three key sector impact. So one of it is healthcare. In terms of healthcare sectors, the fundamentals still remain strong in terms of the demand. Because if we were to look at short-term wise, biotech and pharmaceutical companies, they may stand to benefit if they are able to produce tests and vaccines for COVID-19. And going into the longer term, if you look at the demographics of the US population itself, okay, you can see that those age above 45, okay, due to the previous, these are all the baby boomers. So this should provide a steady stream of a demand for pharmaceutical drugs and also healthcare services over the next 10 to 20 years. And in terms of healthcare, not just for the president, okay, we also have to look at the Congress composition, because having a unified government in a sense, it may actually increase the chance of pushing out aggressive policies. And for the healthcare sectors, whenever there is all those aggressive policies, they tend to don't defavor healthcare itself. But if you were to have a Biden win, but if we can have a split Congress, ultimately it may result in a stalemate. Okay, some policies may not be able to pass, and all these stalemate will generally favors healthcare companies. So other than presidency itself, definitely we have to look towards the composition of Congress. If we are talking about some of the policies, whether they will pass through or not, or whether they will pass through, but it could be of a lesser scale. If you are talking about stimulus, and of course in this case, healthcare policy itself. This I believe my colleague touched on, so I will not go through in that. But generally, insurance positive with Trump because he's determined to weaken the Affordable Care Act, and the act itself actually have various restrictions on insurers. So by weakening it, it would tend to favor insurers because they have better control of their premium itself. But for Biden, even though he wanted to extend more insurance coverage to more Americans, but he actually have a proposal for a government-run public option as an alternative for private insurers. So not say that it's totally negative, but as of now, it's still at the early stage. So we definitely need to await for more clarity on how Biden actually wants to do this. So that's why currently for insurers, it's still kind of mixed with Biden. For drug pricing itself, during Trump's term, we see that the drug prices actually slow down, okay, but ultimately it is still increasing. So in a way, his approach to reduce drug pricing during his term have more or less failed. Whereas for Biden, we haven't seen him seen his results yet, but his approach is to allow for Medicaid to negotiate directly, okay, with the drug companies in terms of the drug prices. Okay, and we believe that this will be a higher chance of success because ultimately Medicaid is under the federal agency, and they may implement tougher actions against companies for non-compliance as compared to the current system of having the insurers to negotiate with the drug companies. And also near-term opportunities may remain for biotech. with a Biden win, we may see a ramp up of COVID testing. And of course, if we have investment in vaccine manufacturing, should also continue, regardless of whoever becomes the president. So near-term wise, opportunities will still be there for biotechnology, but longer-term wise, you definitely have to consider in terms of the drug pricing clampdown itself, which will tend to hurt both pharmaceutical and also biotech companies. And other players will be equipment maker. Okay, Biden aims to manufacture more medical equipment and avoid reliance on other countries' supply. So in a way, he hopes to bring back some domestic manufacturing for our healthcare equipment makers. So this will be a positive. Whereas for Trump, he indicated that he wanted to boost domestic manufacturing, but ultimately he didn't flag out healthcare equipment specifically. So that remains an unknown. For service provider, expansion of Medicare and Medicaid under Biden, okay, could potentially leave demand for healthcare services. For Trump, he wished to promote a telehealth service to rural areas. But ultimately, we believe that even with or without a Trump win, telehealth services will be here to stay. So definitely, you can look out for some of these companies itself. And a conclusion is a divided Congress. We may end up with little or no structural change. This will remove uncertainty for the sector and will be seen as a largely positive. If in the event of a blue wave, Biden's ambition may be more likely to pass. We may see a more aggressive push out in terms of healthcare policy. However, we believe that near-term focus will still be on keeping this COVID situation under control. So any major changes may be put on hold, okay, until the worst of the crisis is over. So we may not expect any major change within this 1 year itself. So these are some of the ETF. If you are going for a sector play, okay, these are some of the ETF that you can look out for. Okay, for energy wise, ultimately, if you look at the past 15 years, the shift towards clean energy has already been underway. So with or without, even though Trump, he's very business friendly with oil and gas company, but under his term, we can see that renewable capacity investment still continue to grow at a quite significant growth rate of around 15.6%. So ultimately, we believe whoever becomes president, the shift towards clean energy will continue. Just that under a Biden, okay, the pace could be accelerated. Because if you were to see from this chart itself, China has actually been investing much more as compared to the US and Japan, UK itself, in terms of producing renewable energy. And for energy sector, for oil and gas, we believe the oversupply situation will be here to stay. Okay, because in 2020 itself, we are seeing a oil production cut of around 6.1%. But with the COVID situation, it's estimated to have a 8.5% fall in the global oil demand. And if we are looking at in terms of this resurgence of COVID cases now, there could be a further fall in demand. So the cuts, the production cuts now is definitely not enough to unlock this oil glut itself. So we believe that oversupply may persist. It may take up to 2021. Even with end 2021, we can see that there is still a slight oversupply situation itself. So this will definitely continue to drag on oil companies. Okay, this is the policy review. I will not go through in depth. Okay, in terms of industrial production, during Trump's term, we can see that there is actually a huge surge of production in terms of mining, quarrying, and oil and gas extraction. So if we were to have a Biden win, we could potentially, revert to the levels pre-Trump, and that could indicate a further fall of around 12 to 13%. And with a clean energy of because Biden want to invest roughly 2 trillion over 4 years. So for clean energy, it could actually imply a 8.2% increase from current investment level. So this is definitely a significant investment for the clean energy industry. So ultimately, we favor the clean energy with Biden's climate plan. We believe the shift will continue regardless, but more so under Biden. And for Trump win, it may provide a short-term boost for the oil and gas industry itself. And if you were to look at the valuation for these oil and gas companies, it seems very attractive. And therefore, we believe that this could be a valuation play. But if you are thinking of a long-term growth play itself, we still remain cautious due to one, prolonged oversupply, and number two, the risk of a virus resurgence itself. So these are some of the ETFs which you all may want to look out for. Okay, the last sectors will be in terms of financial. So for financial itself, things have largely stabilized. Okay, if you look at the financial stress index, the credit market have largely stabilized and liquidity has actually improved because it is back to the pre-COVID normal levels. So we can say that Fed, jumping in with the asset purchases is actually helping to release some of the financial stress in the market. And most major banks are also able to adhere to the CET1 capital requirement by the Fed. And this actually reflects their relatively strong balance sheets to tide through this COVID situation itself. If you look at the total allowance that banks actually attribute for default risk, is currently very, very close to the peak of the 2009 financial crisis. Currently, it's just probably 5.6% below the peak. So in a way, a lot of these banks, they start to account largely for the default risk that is about to come. Therefore, for subsequent build-up for loan loss, we may expect it to start to taper. But of course, one of the key risks is that this COVID situation, definitely have to be kept under control, because if it were to, continue the trend that we see now, we may be looking at more restriction in terms of the economic reopening. And this will definitely add on to the recovery time that is needed for all these banks to recover. So ultimately, all these banks, I believe they are in a good position to tide through this crisis, but ultimately their recovery period will drag on for over the next 1 or 2 years. Currently, if you look at the weekly economic index, it's still below pre-COVID level. And without a stimulus and with the virus going haywire, potentially we could see a reversal in terms of the economic index itself. So for banks, it will still largely be under pressure. Okay, but ultimately they are in a very good position to tide through this crisis itself. These are the policies. I will not go through in depth. So with a Biden win, during Trump's term, we see that his 2017 tax cut actually provide a huge boost for tax savings for the large banks itself. So if you look at all these major banks, they actually are able to book record profits under Trump's term back in 2018. So the tax savings from the tax cut itself amount to around 12 to 15% of their net income. So with a Biden win, he actually wanted to revert a portion of this tax cut. So it may ultimately reduce US banks' net income by a further 6 to 8% moving forward. But ultimately, the conclusion that we have, we do favor accumulating large US bank on a further weakness, considering their attractive risk to reward proposition. But this will definitely be more of a longer term hold. So if I'm talking about longer term hold, it could be for the next 1 to 2 years. And for corporate tax hike to come to fruition, it will depend on the composition of the new Congress. So if we have a split Congress, potentially the corporate tax hike may be reduced to a lesser extent. And also, many people are afraid of Biden's regulation clamping down on all these big banks itself. But ultimately, we believe that the large US banks, they are currently already subject to multiple stress tests by the Fed itself. And they also have, stringent capital requirement restriction that they actually need to adhere to. So any further oversight may actually affect the smaller banks more, as compared to all these larger banks itself. Of course, with a Trump win, ultimately the whole financial sector will cheer a Trump win, right? Because with a tax cut and also his deregulation stance, ultimately it will favor the whole sector itself. So these are some of the ETF that you may want to consider if you are going for this financial sector play. Okay, so I've come to the end of my presentation. So some of these ETF, like those investment theses, which I showed earlier, if you are not able to catch it, right, this webinar is recorded. So ultimately, you can go and rewatch and probably freeze the screen and just take some of the pointers that you need. Yeah, so some of these slides, like in terms of a Biden win, we have a positive, neutral, and a negative. So some of these portion you can rewatch the seminar again to take down some of the pointers. Okay, so for now, I will be looking through the Q&A. Okay, one question is impact on insurance. Which are the major players? There is actually some insurance play though. Let me just share the screen for you. Okay, do give me a moment. Yeah, like in terms of healthcare companies, you can look under IHF. So these are the healthcare providers, and the major holdings that they have is actually the insurers itself. Okay, under this IHF, the iShares US healthcare provider ETF. Okay, and yeah, the second question I think is the same thing. Yeah, Tanner, United Health, CVS Health. Yeah, all these are also they have exposure to the insurance industry itself. So you may look out for these companies if you are going for insurance play. Okay, the next question is, do you already pre-screen for the fundamentals? We are more largely focused in terms of sectors, but of course, when talking about fundamentals, we tend to choose those that is of a certain skills. Yeah, those that is of a certain skill that is, definitely they are able to tide through the COVID situation, and of course they will have a direct beneficiary effect from the policies which the in terms of a Biden or a Trump win. For valuation wise, we didn't screen through. I understand that if you are looking at some of the clean energy play and also some of the healthcare play itself, I do understand that the price have actually start to run up quite a bit. So valuation wise, definitely if you look at the valuation itself, because when you are going into this clean energy play, is you are buying into its future potential growth. So it's very hard to justify how much they can grow. So there is definitely a risk there. But for valuation wise, that is something that you may want to take note of. But if you are looking out for those low valuation, if you are going for more of a valuation play, Then of course there is the energy sector and the financial sector. And of course, between these two, we tend to favor the financial sector more because for energy, like I mentioned, the shift towards clean energy has been underway. So not too sure how they are able to transform their business to cope with this situation itself. Yep. Next question is, what is your take on tech and semicon? Okay, ultimately, I believe that tech and semicon will benefit moving forward. Okay, if you are talking about if you are going into 5G Internet of Things, there is still a consistent demand for semicon itself. So if you are looking for, if you want to enter, this correction may actually present you with a good opportunities to accumulate. Of course, I'm not saying today because my stand is, going into election, things will still be very, very uncertain. Even after election, if we have a very close contested election, market doesn't like that, we may be seeing a sell down if we cannot have a concrete election results on Tuesday itself. So near term wise, definitely if you are not a trader, if you are investors, probably you may want to stay at the sideline first. But ultimately going into next year, these are some of the 5G play. All these will definitely will start to pick up with the recovery in the economic situation itself. Are your webinars posted on YouTube? To be honest, I'm so sorry, I'm not sure whether it will be on YouTube, but it will be on Facebook Live, I guess. Yeah. One question is, what is your opinion on US currency? Okay, of course, I'm not a forex analyst per se, but ultimately, I can just provide my own 2 cents, my own general view on this. Is that moving into next year, especially if we are talking about a Biden win, if you are talking about Biden win, with all these infrastructure plans that he has, it could potentially have a downward pressure on the US currency itself. Okay, but for further, analysis, probably you have to look to our futures department for their forex analysts to enlighten you. Yeah. Okay, so other than that, I think we have surpassed the 9 p.m. mark. If you, sorry, I think there's one more question. Okay, there's a question that says, as investors already invested in the market, hence I think no longer stand on the sideline given this uncertainty ahead. Then should investors sell now even if underwater? If you are thinking of selling now, you are hoping to actually buy back from a lower price itself, right? To be honest, I'm not too sure. Yeah, because to be honest, near-term movement, it will definitely be very volatile. So I'm not able to, I do not want to ask you to sell and then end up, the market actually recover. Yeah, so but what you can consider is that whether do you have the capacity to hold it through until next year, if we are talking about mid 2021, and that is when we could have a concrete concrete fiscal stimulus, and also we may be seeing some improvement in the vaccine itself. Yeah, so I mean, if you have the capacity to hold, or I wouldn't advise, totally selling out from this market altogether. I mean, if you want, you can reduce your position. Yeah, but ultimately going into 2021, we are still quite bullish in that in this sense. But yeah, you need to have the holding power. So if you are playing CFD or this, yeah, it's not very wise lah. Yeah. So that's our 2 cents on this. Yeah. So so with this, we will end the seminar. So thank you for joining us today. And next Monday, we will have a US webinar, but it will more or less be whatever that you listen to today. But if you want to recap, do feel free to tune in. And other than that, let's look out for the results next Tuesday. And Thank you, everyone, and have a very good night. Thank you.